Hi everyone, welcome to a Monday Market Update. I'm going to cover some really cool things today. It's always nice when the market is in a hugely positive state. We're sitting at 28,000. We breached the all-important 25,000. I'm going to tell you why that is just the most crucial pivot point. It's what we've been talking about ad nauseum in these videos over the journey since 2021, when we're coming back down to retest it. And it's also something we've been ramming home with our mastermind clients is wait for the 200 moving average to be breached, see what the reaction is. The market's still in a positive state. What's the narrative? Where are we going? And it looks really, really strong right now. And we've closed above it on the weekly, which is super, super important. So let's just move on over to the charts and have a real quick look about what is going on. Here's what I'm talking about. It's the most beautiful close you would ever want to see. If you're a longer term investor and you've been dollar cost averaging and buying in all the fear and all the dip, this should make you feel amazing. So again, if you're a client of ours, you'll know how big and how strong we've been on. If you're in the mastermind group and watching this as well, how big we've been on in terms of when you're looking at the market falling, you're not looking to catch a falling knife. You're looking to find extreme points in the market, dollar cost average and correction buy, and slowly accumulate when you know that you're seeing a supreme area of value. And that was, of course, when we're looking at on-chain data, when we're looking at the realized price, when we fell beneath that, that's the average cost basis of investors. When we fell beneath that at around 22,000, I believe it was, this is a point of maximum financial opportunity according to previous bear markets. Whenever we've gone underneath it, we're not long underneath it. And when you do buy there, that is the point of maximum financial opportunity according to history. So we did that at 22,000. We're under 20,000. The media, everyone is telling you that crypto, Bitcoin is dead when we hadn't even had as big a retracement as we did the last bear market. Everything's going to zero. So many tweets I would see when we're down at 17, 15,000. We're going to 10, we're going to 12, we're going to 7, we're going to 3 digits. All this nonsense that if you had avoided that noise and done the counter thing and made money in the disagreements by actually leaning into the fear and understanding what's going on, layering in for that next cycle, right now you feel pretty darn vindicated. And I've seen this over multiple cycles, and it's playing out exactly again. Now, not saying we're in a bull market, anything but. We're looking like we're heading into a pretty significant new bull trend. The bull market steps are being layered in here. Bull markets tend to happen after the Bitcoin halving, but again, we want to be careful with preconception because I think this year is going to be incredibly powerful. All things staying equal, and we're seeing more QE, the banking crisis, everything falling apart. If this market gets pumped full of liquidity again, this can go anywhere. So you just have to have these possibilities in your mind and position yourself as an investor, because right now, I guarantee you, a lot of you watching this are feeling, oh dear, I'm still a lot in stables right now when I really should have been paying attention more to the lows. Now, that said, you really want to not get too hung up on that as well. You want to sort of think to yourself, all right, so I've missed the first phase of the move, maybe the first 10, 20%. But what you really want to figure out now is how to capture the meat of the move. And as well, when you're at the top, when you're close to the top, it's not about selling the exact top. You're never going to sell the exact top unless you get incredibly lucky, and even then it's just, you don't even want to focus on that. You want to focus on an area where you're seeing yourself or the market in an extreme state. You can do this via technicals, on-chain, and a multitude of other things. But when you're in a zone that you think's extreme, so anywhere, let's say back in this previous market, anywhere from, say, 30,000 up to 69,000, anywhere in that point when you're riding up, you're looking at the moving averages, you think we're in a really strong positive state. You can take profits off the table. I mean, on-chain up here was sort of screaming we're a bit overheated, but it didn't scream that we're in a blow-off top, so it confused a lot of people. Regardless, there's lots of factors that go into this sort of stuff. But if we go back to the 200-week moving average, every single market that we've seen previously in the cycles has been held up by the 200-week moving average. We are finally back on top of it. I would say that we were pushed artificially beneath it because of traditional financial markets being in a massive bear market, quantitative tightening. We've never seen Bitcoin or crypto being alive during a phase like that. So we're now back above it. This is hugely bullish. We've closed here with this massive, I'm going to call it God candle above that there. There's no reason why we can't come back down and retest some of these levels. But what we've just seen previously, especially when 2019, when we just skipped away to 14,000 from 3,000, the market just didn't give people opportunity to the dips to really pull back in. The obvious dips, they just did not give them that opportunity. And the way that this is looking, it's looking more likely to me that we're going to go maybe to 32,000 before we really see some resistance on this. But just broadly, the close above the 200, massively positive signal going forward. Altcoins haven't fired as yet. I'll get into maybe why that hasn't happened as yet, just in a little bit further on. But just looking at this, guys, longer term investing is the way to look at this sort of stuff. If you are, deeply challenged by the short-term noise, the media, the hype, and all that, because right now, if you are listening to all the doom and gloom, down at 16, 15,000, the macro bad, all this, macro was bad, but if you looked through it, you can actually see that it was going to turn. But you've missed, an 80% move from the lows. And altcoins are up, in some cases, quite high percentage points. Right now, Bitcoin has that narrative, the banking crisis, divorced an insurance policy from the financial system. So a lot of liquidity is going to stay there for a little while. Now, just further on to this week, if you aren't on economic calendar, and this is what we're using with our mastermind clients to really give them that shorter term edge if they want to trade this, or to give them that foresight of where we're actually heading. And it's very, very clear that we because of the banking crisis, the Fed has broken something with its aggressive rate rises. So we're heading towards more QE, more band-aid solutions and bailouts. The banking system is that cornerstone of the global financial system. You can't just let it fail in this current state. And the Fed knows that. A lot of the small middle banks are now, going under, and I say a lot, but it's too many. And there's a lot of fear and panic out there. It's creating bank runs. These high yields on these bonds, the banks are needing to sell these, and they're realizing losses with every sale. So there's massive holes. So they're borrowing from the Fed. The Fed are printing the money to cover the losses. It's a merry-go-round of bullcrap. But what we just need to do is keep that future vision, foresight. Keep looking forward. Where is this all heading up? This Thursday, March 23rd, is the most important FOMC we have had in recent memory, because the banking crisis essentially shows the Fed's hand. They can't really go any more ahead. That said, I think it's fairly possible we do reach this forecast. They go at 0.25, but Powell's language is everything. And with everything going on, if he, even hints that the next one that they're going to pause, and I think that's pretty likely, he's going to try and remain a bit neutral here. I think markets are going to rally. If they cut rates, markets are going to rally. If they say that they're pausing, markets are going to rally. If they go 0.25%, markets probably have a little bit of a double think and a pullback. But broadly, the writing's on the wall. They're going to have to stop soon, because their rate rises are breaking the US banking system, and by extension, the banks in Europe. Credit Suisse almost going under overnight, being bought by UBS. They're now transferring all Credit Suisse's liabilities and issues onto their balance sheet, which is a bigger bank. It's happening, and there's other banks that are on edge now and stresses. So if there's another massive or mid-sized bank with a big name that's under a lot of stress overnight or this next week before the FOMC, I think that changes the ball game again, and we could be looking at a cut. Who knows? Markets are actually pricing in a fair probability of there actually being a cut in the near term. 100 basis points even. 300 basis points is being heavily priced in by the beginning of next year. So this is all happening very, very quickly, and they need to bring down rates if they want to reduce the stress on the banking system versus printing a heck of a lot of money in a short amount of time. So this is hugely consequential. Use trading economics in your investing and your trading. All right, now here's where it does get interesting, because Ethereum has moved a little bit higher from 1,720, which was that key pivot level we can see here. It's not looking very strong here, though, which is giving me a little bit of pause. But regardless, this just shows the broader sentiment around everything but Bitcoin right now. It hasn't got a lot of liquidity still. And what generally happens in this phase is Bitcoin is going to run an impulse higher. And after it finds a sticking point and it goes sideways, that's when the liquidity begins to filter down to altcoins. But again, we have to be very cognizant this isn't a bull market. The liquidity is in Bitcoin right now because it is divorced from the financial system. It's got the most trust. And it's thought of as that gold 2.0 sort of standard. It doesn't mean altcoins are going to run soon here, but I think we need to be very objective about seeing 10x moves really quickly in the short term, especially in the midst of this crisis. There's still not a lot of appetite for high speculation right now. Bitcoin isn't really high speculation. It's a macro asset class, whereas crypto, again, is still more in that higher risk speculative state. So I really want to see Bitcoin find a pause. I want to see Ethereum begin to run before I get even excited about altcoins yet. Not saying that these aren't really good opportunities to look at altcoins as they're starting to draw down into the suck, because what happens is, and when you see in 2019, you saw in bull markets as well, when Bitcoin wants to run, it tends to suck the oxygen out of all the altcoins, because all the liquidity is running to Bitcoin, because it's almost like the low risk sure thing that's going to move higher. So all the liquidity runs into Bitcoin, Bitcoin moves higher. Once Bitcoin finds that sticking point, that liquidity then cycles back out to the large Ethereum, large caps, mid caps, low caps, and then those real high risk speculative starts popping, and then it filters back in the reverse. Once profits are being taken from all of those speculative assets, it runs all the way back into Bitcoin, and Bitcoin makes its next impulse after a consolidation phase, repeats all over again. So please be very cognizant of that liquidity cycle. Going all in on altcoins is just mind-blowing at this point in the market still for me. You want to look at what's driving this, what is the trend setter. Right now it is Bitcoin, and you really don't want to move too far away from those kind of observations. So Ethereum still looks really, really nice on the longer term. Like this will outperform Bitcoin massively at some point and have an incredible run, but it's not yet, I don't think. We really want to see what's going on with FOMC, and I think we might get a bit of a contraction just leading into it. And this here finally is the Bitcoin dominance. Now, there are other dominance charts. I'm not sure how relevant this is, to be honest, anymore, because dominance captures even stable coins as well in its calculation. But essentially, if you're looking at the entire crypto market sphere, all the capital in the crypto market cap, it tells you what percentage is in Bitcoin versus everything else. So very, very useful. So whenever Bitcoin is just ripping and gaining dominance, it's usually in a bear phase, or when Bitcoin is just ripping out and altcoins just can't catch up. Well, again, the oxygen's being sucked out. And look at this absolute massive candle we've got here. And just to give you an illustration, see when dominance was really low in Bitcoin, down 35, a little bit lower percentage points. That's when we're in 2018, when altcoin ICO boom going crazy. Over here, when it was low at this point here, this was 42, 41%. That was in 21 when we had the bull market. So Bitcoin now reversing, eating a lot of the market cap as the liquidity flows back. This really needs to, find a short-term top out for that. And this is illustrating on a chart what I've just been saying about that liquidity flow. Bitcoin has to stop, consolidate, dominance will shift back into altcoins, and it reloads and then should go higher. So that's what you really want to pay attention to. But dominance is a hyper useful chart. I still think it has merit and relevance, but the stablecoin aspect is kind of skewed it a smidge. But if you discount stablecoins, last time I looked, I think Bitcoin dominance was more at 60 to 65%. That may have changed. But apart from that, guys, I hope you've enjoyed this episode. Remember, 1 foot in the now, 1 foot in the basket of looking at the next cycle as well. It helps you so much to focus in these incredibly difficult times of noise, media, and sentiment-driven markets. So have a wonderful day. We'll catch you again for the Altcoin Bible. Bye.